Trump's Greenland Gambit sends shockwaves through market, rekindling sell America fears. Washington's trade posture has once again unsettled global markets after Donald Trump revived tariff threats against European allies, this time tying economic pressure to his long-standing ambition to acquire Greenland. The move has reignited investor anxiety around a renewed sell America trade, echoing market turmoil last witnessed after the sweeping tariff measures imposed last year. Financial market reacted swiftly. European equities sold sharply, while US stock futures pointed to weakness following the holiday-themed trading session. Currency markets reflected a similar unease. The dollar weakened as investors reassessed the geopolitical risks surrounding US trade policy, while European currencies, including the euro, sterling, and Scandinavian units found fresh support. Traditional safe haven assets such as Swiss franc also surged, underscoring rising global caution. At the heart of the disruption lies Washington's threat to impose tariffs starting at 10% on select European goods from February, escalating to 25% by June, unless the United States is permitted to purchase Greenland. While the proposal itself borders on the extraordinary, its market impact is very real, highlighting the degree to which US discussion policy discontinues to dominate global financial sentiment. Despite the volatility, analysts suggest market remain restrained compared to the violent reaction seen during last year's tariff shock. The relative calm indicates that investors still believe the White House may ultimately de-escalate as it has in previous confrontations. However, uncertainty persists. A pending US Supreme Court ruling on the legality of Trump's tariff authority and the absence of a coordinated European response have further clouded the outlook. Yet abandoning the dollar remains a formidable challenge. The greenback, despite falling sharply last year, has stabilized amid signs of economic resilience in the United States. Investor positioning suggests sentiments remain cautiously supportive, though fragile enough to shift should tension intensify. Ironically, even as global investors weigh reducing US exposure, Washington's tariff threats also inject renewed uncertainty into Europe's own economic outlook. Export-heavy economies such as Germany and the United Kingdom face disproportionate risks, with analysts warning that prolonged trade friction could weigh meaningfully on growth, investment, and industrial output. For now, markets are caught between confidence in America's economic strength and growing discomfort with the geopolitical unpredictability. Trump's Greenland-linked tariff strategy may ultimately prove a negotiating tactic rather than a sustained policy shift, but its impact is unmistakable. It has reminded the world that US political decision remain the single most powerful force shaping global trade, capital flows, and investor psychology.